We'll call it a triple whammy. Possible breakdowns for oil, gas, and the S&P. Bloomberg's Adam Johnson is here to break it down for us. Adam.
That's right, breaking down the breakdown or potential breakdowns.
Okay, start with the S&P 500. What are the analysts saying? Because I guess we've reached a critical number here.
We've got three. And by the way, just so viewers know, it's the SPX, crude, and nat gas, all potentially breaking down, but potential is the key word.
Okay.
And on the SPX, we'll start it right off. Broke the 200 and the 50-day moving averages yesterday.
What are analysts saying about that?
Yeah, analysts are saying watch out. As a matter of fact, MKM's Katie Stockton was out early this morning. She was the first one out with a comment. And Vera, she was saying 800 is where the SPX is headed. That would be about 11% down. That would certainly turn some heads. Interesting also, Instanet's John Schlitz said he thinks we're going lower, but he said now that we're below 899, he said 875 becomes a critical spot. He said if we break 875, who knows? But he's saying ahead of the Fed, which is, of course, tomorrow at 2:10,
right.
No one's likely to do too much.
Okay.
So a 24-hour reprieve, Vera.
What about crude? Because we're at a critical number there, too.
Yeah, we sure are. Now, what a difference a few hours makes. This morning, crude was looking down. It was down all day, and then about an hour and a half ago, it started to percolate. It's up about $2 right now, and it's back above the $68.50 level, which analysts have said is critical. Stephen Schork, rather, this morning said if what's happening in Iran and Nigeria can't keep crude above 68.50, then nothing can. There's been this push and pull between the technical analysts on the one hand who say that, well, it's above 68.50, therefore it needs to stay above 68.50, and of course the fundamental analysts who say look at crude inventories, look at gasoline inventories, look at refinery utilization, etc., everything that says it doesn't deserve to be here. So it's at that critical spot, but as we say, it closes in about a half hour, and it's back above 68.50. So we'll see.
And I guess there's also talk that crude may be replacing gold as a hedge against inflation.
Yeah, interesting point out of Jessup Lamont. Louis Krebs made that point that oil is the new gold.
Huh, okay.
Interesting, as an inflation hedge.
Nat gas below the critical $4 price?
Yeah, $4 is the sort of psychological place that everybody's focused on. And again, what's happening there fundamentally is that inventories are at record levels. Vera, they've never been this high. And no matter who you speak to in the analyst community, they're incredibly negative on nat gas. Goldman Sachs, as a matter of fact, is saying that with nat gas under even $5, it doesn't pay to drill. So people are going to stop drilling. They're cold stacking these jackup rigs. The world fleet now, 21% of the jackup rigs are cold stacked, meaning they're mothballed. They're not going to be used. So, yeah, a lot of bearishness in nat gas. As a matter of fact, they say it could go to $2.
Very interesting. Triple whammy. Thanks, Adam. Mark, back over to you.
Vera, Adam, thanks.